Hi, my name is Mom Afizi and I will be explaining about liquidity ratio of Jets resource per height. So liquidity ratio is an ability to meet short-term financial obligations. This is crucial as it indicates whether the company has sufficient resources to pay its creditor when payments are due. This is a key indicator of its overall financial status. So first, let's start with current ratio. The current ratio measures the company's abilities to cover its short-term liabilities with its short-term assets. It is calculated using the formula current ratio equals current assets divided by current liabilities. So based on the financial data provided in Just Resource Berhad 2023 annual report, we have the following values. Current assets RM594453136, current liabilities RM550215754. So the calculation will be 5 the current assets divided by current liability, which is 594453136 divided by 550215754. So that it's equal to 1.08. This indicates that the company is in a good position to cover its short-term liabilities. So next, let's calculate the quick ratio, which is a more stringent measure of liquidity because it's exclude inventory from current assets. The quick ratio is calculated using the formula of quick ratio equals current assets minus inventory divided by current liabilities. So from the report, we got inventory RM483400. The calculations will be 594453136 minus 483400 divided by 550215754 is equal to 1.08. So both ratio being 1.08 indicates just resource Berhad can comfortably meet its short-term obligations. And for the next part, we will discuss about efficiency ratio, which is its efficiency ratios means managing and generating sales by calculating two key ratios from their 2023 annual reports. So first, I will explain about inventory turnover ratio. This ratio measures how many times the company inventory sold and replaced over a period. The formula is inventory turnover ratios equal cost of goods sold divided by average inventory. So from the annual report, we get that cost of goods sold are 8,335 7 sorry 8,335,701 ringgit. So and inventory are 483,400 ringgit. This is average from beginning till the end of the year. So the calculation will be inventory turnover ratio equal 8,335,701 ringgit divided by 483,400 ringgit, and it's equal to 17.24. This indicates that just a resource Berhad turns over its inventory approximately 17 times in 2023. Next is average collection period. So this ratio measures the average number of days it takes for the company to collect payment from its credit sales. The formula is average collection periods equal average account receivable divided by credit sales and multiplied by 365. From the report, we get that account receivable is 225,673,296 ringgit. So the revenue is 1,794,720,383 ringgit. This is assuming total revenue is from credit sales. So the calculation will be average collection periods equal 225,673,296 divided by 1,794,720,383 multiplied by 365, which is 40. We got 45.89 days. This indicates that it takes just a resource Berhad approximately 46 days to collect payment on average.
Hi, my name is Rukia Hatib, and I will proceed in talking about the non-current asset turnover under the efficiency ratio. So in order to get the non-current asset turnover, you just have to do sales divided by non-current assets. So in the article already they have the cost sales divided by non-current asset, you get the answer.
Hi, my name is Muhammad Luqman Rashid bin Wasmi Effendi. I'm from DCG and my ID number is 012023021568. So I will present about the ratio. First about the total asset turnover. But before I start with the presentation about the ratio, I will summarize a bit about what is total asset turnover. Total asset turnover is a key financial metric that measures how efficiently a company uses its assets to generate sales, calculated by dividing net sales by total asset. A high ratio indicates effective asset use, leading to better operational efficiency and profitability, while a low ratio suggests inefficiencies. This ratio is important for benchmarking performance against industry peers, guiding investment decision by indicating financial health and helping management optimize asset utilization. It plays a critical role in assessing and improving a company's financial and operational effectiveness. So, how to calculate the ratio? For total asset turnover, it is the use of sales divide with total asset. So for the sales is what I get from the Jax Berhad is 8.335.701. That is for sales, and the second one is for total asset, which is 1.270.274.173. So after the calculation, after we divide, the result is 0.06. So the second one is
Hi, Assalamualaikum and good day to Sir Amir. My name is Muhammad Sharif Fitri bin Shazli. So for today, I will explain about leverage ratios. So leverage ratio is a display a company debt to equity ratio. It will make us to be more understand on how the company operates their finance by loans, and it also shows the maintains like the power of the company to the ability of the company to fulfill the long term of the debt obligations. So in leverage ratios, they have three parts, which is debt ratios. The second part, debt to equity ratios, and the last part is time interest earned. So based on the company that we are choose, which is Jax Resource Berhad, we can find the amount based on their financial reports, and then we can apply on the formula to find the specific equations that we want to find. So the first one, which is the debt ratios. The debt ratios is a total liabilities divided by total asset and times 100%. So based on the financials reports, we can see the total liabilities is a 99 millions 96,400, and then their total assets on the 2023 is 1,274,173. So based on this amount, we can calculate the total liabilities, and then we divide it by total assets, and we times 100. We can see that the debt ratio is 7.80%. The second one, which is debt to equity ratios. How to find debt and equity ratios? We need to find their total liabilities based on the financials report, and then divided by total equity and times 100%. So the total liabilities same to these previous equations. The debt ratios, the total liabilities is 99,096,400, and the total equity is 1,171,177,773. So based on this amount, we can calculate, we divide them, and then we times to 100%. We can find it. The totals of debt to equity ratio is 8.46%. And the last is questions is time interest earned, which is we need to find EBIT, which is EBIT is a earning before interest and tax. Based on the financials, we need to find the EBIT. So actually I cannot find the EBIT in the financials report, but I find the similar words, like different words, but it's bring a similar meanings to EBIT. And then we need to find interest expenses. So EBIT need to divide it by interest expenses. So based on the financials report, the EBIT for jet resources Berhad is 34 millions 874,743, and then their interest expenses is 224,747. So after we divide them, we will see the last amount is 145.14. Alright, so for the next part, I will present the first equations for profitability ratio, which is gross profit margins. To find gross profit margin of jet resources Berhad, we need to find their gross profits and sales based on their financial report on 2023. So the first gross profit, based on the financial report, the gross profit of jet resources is 7 million and 8,100, and then their sales is 8,335,701. So based on these amounts, on how we want to find the gross profit margins, we need to divide gross profit and sales, and then the amount we need to times and 100. So the 7 millions and 8,000 hundreds needs to divided by 8,000, sorry, 8 million and 335,000 and 701, and then we need to time by 10%. So and then we can see the gross profit margin is 93.57%. Thank you.
Under, when you talk about the profitability ratio under like the return on asset, for you to get the answer, you just have to net profit divide by the total asset times 100. In the article, they did not have the exact net profit, so you just have to look for something similar of a net profit, such as net income, net earnings, anything that is similar to net profit, and then divide it by total asset times 100%. And
the return on equity, how to calculate the ratio is by net profit divide with total equity and multiple with 100. So the total equity that I get from Judge Berhad is 1.418.346.961, and for the total equity is 31.220.093. So the total calculation and the result that I get after I divide and multiple with 100, I get 2.2, that is for the ROE. And the third one is the dividend payout ratio. The dividend payout ratio measures the percentage of earnings paid to shareholders as dividends. It is calculated by dividing dividends paid by net income and multiplying by 100. This ratio is important because it indicates financial health, earnings quality, and management confidence in future performance. It provides valuable insights for both income and growth investors and help assess the sustainability of dividend payments. So, how to calculate the ratio? The dividend payout ratio is the calculation is by dividend per share divide with earning per share. For the earning per share is 0.75, and for the dividend per share is none. So the total calculation is 0.75. So the last one is the price earning ratio, which is in short is PE, calculated by dividing a company's market price per share by its earning per share. It is a crucial financial metric. It helps assess whether a stock is overvalued or undervalued, reflects market expectation for future growth, and aids in comparing companies within the same industry. So how to calculate the price earning ratio is by include market price per share and divide it with earning per share. So for the earning per share in Judge Berhad, they have 0.75, and the total calculation that I get is 0.75. So that's all from me. Thank you.
continuing with the market ratio under below a like dividend yield, in order to get in order to calculate, you just have to do the annual dividend divided by the current market share prices. So like we try, like in the article, the annual dividend, they did not have the amount of it like for both the group and company. So we had to try to look for the similar thing to annual dividend, like the special dividend, stock dividend, or dividend yield. And it was very difficult, but and then we'll look at the current market share prices. We are like the similars, such as bid prices, stock prices, anything that is similar to current market share prices. But in the article, they did not have the current market share prices, so it was very difficult for not to in order to get the exact amount.